Welcome back. Good day, guys. Trust you're doing well and your day is going wonderful. Right, welcome back to this video. So, in this video, we'll be looking at using our tools for market analysis. So, whichever analysis you're using, is it price action, support and resistance? Is it ICT? Is it order flow? Is it indicator or whatever you get? So we will be looking at using our tools for all of this navigation. All right, so first of all, you need to figure out what type of trader are you. Are you a day trader? Are you a swing trader? Are you a scalper? Are you a position trader? Whichever way. So the difference of all of this analysis is in the different time frames. Please get my point. Let me go over it again. The difference with all of this analysis is what is in the different time frame. So as a position trader, a position trader is more of a kind of it's a kind of let me put it, it's a kind of investing strategy. It's a kind of investing strategy where you hold position for years, you hold position for months, you hold position for a long period of time. So you are not just concerned about just the small increment of it just that's investment. That's what I'll say. It's investment, like savings, right? Yeah. All right. So that is for position trader. But as a swing trader, you want to be looking at time frame like maybe the 1 month, the 1 week, the daily, and then maybe 4 hour for execution, as the case may be, or 1 hour for entry model, as the case may be. Then as a day trader, you want to be looking at maybe 1 week maximum, then 1 day, then depending on your entry model, 30 minutes, 50 minutes, 5 minutes, as the case may be. 5 minutes may be lowest. Then as a scalper, you want to be looking at maybe the 1 hour candlestick, or the 1 hour, using the 1 hour time frame. The other is like the highest, then maybe the 50 minutes, the 5 minutes, the 1 minute, that is for a scalp strategy trader. All right, so we'll just consider, we'll just do an overall view of maybe with any of the strategies, or let's just say, is it trendline strategy we'll be using, or support and resistance or order flow? Okay, let's just say we'll be using trendline. Okay, support and resistance, yes. So now, okay, let's assume I am a swing trader. So how do I approach the market? A swing trader will first of all use a higher time frame to find the overall direction of the market, and then momentum, right? Very important, market momentum. And then he's trying to catch his trade for maybe from 2 days to some weeks. Yes. So as a swing trader, you know that you want to be maximizing opportunity. This is a daily candle. So like 5 of this now makes a week. 5 of this makes a week. So let's just assume, okay, we are doing our analysis. Support and resistance. Support and resistance is all about marking key levels which price has retested for a long period of time, and then watching to see price reaction to those levels. So you can see all of this now. You can see that all these points I'm marking, market has reacted to it severally, and as well this. So now these are basically key levels, support and resistance. But then there are no psychological level. The psychological level will be specifically called key levels in the market. So now looking at this, what can we see? We can see a chart pattern, right? Okay, let's leave this for advanced. All right, so let's leave this for another videos. All right, so what are we seeing? So you can still do the same in all of this. So now you see now, okay, I have marked some of these points. Okay, let me go ahead and mark this as well. This is a resistance zone. So let's just say I've marked this. As a swing trader, what am I looking for? My time frames are very important. So now I can come and navigate maybe to 4 hours to see the actual flow of the market. So now, okay, for me, I get that the market has been trending upward bullish, and then it has broken this. So maybe depending on my strategy, I might decide to start buying this market from here, but then I'll wait for a correction, either a correction retracement, retest, pullback, or whatever, depending on your entry model, depending on what you're looking for, then I can take my trade. But now, for the purpose of this class, let's just use a day trading setup. And please, this is really an update. Please, if you pay attention, you will know that you are really getting something in a kind of advanced course. All right, so as a day trader, I'm focused in what is happening in a particular day. So that is why I use the Q zone, ICT Q zone. Why? Because it shows me the fragment of section with much liquidity in each day. So now this is Wednesday. See, this is Wednesday. Asian range, London range, New York range, and the London close range. So to be the same for Tuesday, it will be the same for Monday, right? So my own intention as a day trader is to do what? Is to try to catch moves, maybe from London Q zone to New York close Q zone, and then I'm done, right? Depending on my target, depending on what I'm intending to get. All right. So for the purpose of this class, let me just use simply the ICT trading strategy. So let's just do this for 1 week, and then I'm sure that we will have used a whole lot of tools. Alright, so let's just say, okay, I've done this in my day trading ICT strategy, so you can go and check that video back for good insight on this. But then I just want to show you how you can do this using your Android. Yes, that is navigating using your Android for your analysis. Right, okay, let's say we are starting from March. Okay, this April. Okay, let's say we start from March. But then I'll just be doing this for 1 week, and then I'm done. Then if you are really loyal to yourself, you can go and test it for yourself. Okay, first of all now, okay, so this is the starting of the month of March, right? So this is 3rd of March. This was a Monday. So as an ICT trader, first of all, I'm waiting for market to somehow kind of manipulate. Okay, first accumulate. That is the Asian range, is mostly used for accumulation, and then to do what? To manipulate. Manipulation is a false move, then to distribute, and it's a distribution I'm interested in. So looking at this, I know that okay, there's an imbalance here. This is liquidity. You can check out my video on day ICT trading strategy for more insight. So this is liquidity. We wait for a raid of this liquidity. Market tapped, market can tap it. This is maybe like 30% or 40%, or maybe 50%. Market can tap it, maybe 100% sometimes, most times 30%, most times 50%, as the case may be. All right, so but then market tapped on this. This is the London Q zone, right? Yes, London Q zone. And mind you, this is the time frame I'm using, 15 minutes for this, for the purpose of this class now, 15 minutes. So what am I doing? I've spotted out an accumulation and a manipulation. What am I looking for? I'm looking for structure shift, market structure shift. That is MSS. That's what we call break of structure. That's what we call market structure shift. So maybe after seeing this market structure shift, you see, I will mark this now. What do I want to see? I want to know that okay, this low somehow, to some reason, it might be protected. Why I'm saying that it might be protected is based on this strategy, it might hold, right? But it might be protected in this case because not all trade is a sure banger, let me put it that way. So it might not. So for the purpose of this now, I know that okay, this is a low, so I can use this now. This is what my position 2, this is my long 2, and this other one facing down is my short 2. So I'll put this after this break of structure of this high. I will now put this here, this entry. My stop loss were at this low. Most times I like using stop loss of 14 pips. So maybe if I should do that, okay, 14 pips, or so maybe my stop loss will be here, depending on the leg of the structure. You know why? Because this is it. This is Euro USD. Go and do your testing. On average, on an average base, Euro USD will not do more than 45 to 50 pips in a day. So you trying to make money, because what you are trading is to make money. That is the truth. You are not just trading to show that you know how to trade. If you know how to trade, that means you'll be making money. So just think of it. In a day candle move, either buying or selling, that is making 45 pips. How are you positioned to make money in that kind of day? If you are not a swing trader, or maybe if you are just a day trader, that means you are supposed to be very realistic. Really risking 14 or 15 pips now, I can know that okay, maybe I can get a 1:3 risk to reward. That is what, that is 45 pips on an average. What euro USD might do in a day. So that is why I use 14 pips, right? Yes, that's why I use 14 pips. That is an update. So now I like to target 1:3. So I'll take this to what, 1:3. So it's not that I'm just targeting this. I'll do my top down analysis. If you need top down analysis, I use price action for that. So maybe you can check my video on price action to get that insight. So now this is a fair value gap, this is a target point, but 1:3, I'm okay with this. So what happened? Market came back, just activated me slightly, my SLB low, and then boom, TP. So this was what, this was Monday. I don't need to trade New York Q zone again. I'm done. So see what I use. What did I use? I used my trend line. Yes, I use my trend line. This is my trend line, this down one. I can use this to draw trend, to draw line, from a pivot point. I can just use this to do a whole lot of stuff. So for the purpose of this strategy, is what I'm using it to do. Alright, so next I come on Tuesday. Now I will still do the same. So Tuesday I want to spot the accumulation in the Asian range, and this was a kind of ranging market. See, accumulation. So after this, what could we see again? We saw this. Okay, this is the London Q zone. So what are we watching for now? We are watching for a kind of manipulation. So okay, there's what we call Asian raid. So we first of all spot this very kind of Asian, this. Okay, let me not go ahead of myself now. So you see this. So just observing this market, I'll start, let me just say, yes, as the start of the London Q zone, I'm observing this market. First of all, I saw this harsh momentum indicating that price is rallying upward. First of all, what do I see? Monday has given me a good buy, right? There's momentum. So maybe either Tuesday will come and do pullback, but market is not always logical as you think. So you just need to go with the flow of the market. Seriously, that is just the logic. So now if I should mark all this resistance zone, I'll mark this like this, and what, there's been a breakout here. So there are two things I can do. I can either wait for a solid confirmation, or maybe if I'm venturing in this trade, use my order. See, the purpose of me doing this is because I want to show you how to do this using your Android, right? Because I did this earlier using my desktop, but now I'm doing it using my Android for the purpose of those that will be using Android to do this as well. So now tap on this, and now my risk to reward 14 pips. 14. Okay, this is the low, so I can just put it below the low a little bit. Yeah, 1:3. So 1:3. But then I need to sort out which point am I taking. Okay, that will be far in the future. So what happened? Market boom, broke out. Or then I can use this. So I'll wait for this breakout. Now after this breakout, another, okay, market has broken out. Then maybe I'll use my entry at this point. Put my entry here, buy limit. But then market came. You think the market has gone? Market still came down. If my entry was around the zone, I would have still got activated. So let's just say yeah, I would have still got activated. And after this activation, boom, riding up straight. This was what? This was Tuesday. This is 1:3. So let's accumulate our profit. So let's say on Monday we are risking maybe 1%, 0.5% as the case maybe. Let's just use 1% for the purpose of standardized reference. 1%, I'm up 3%. 1% in this, I'm up 6% of my account, right? Yeah. So as well, this is Wednesday. So what am I doing on Wednesday? Spot Asian range. The momentum is there. Spot Asian range. Then this is my focus, London Q zone. I'm looking at this. So first I saw this. Okay, what time is this? 8:15. Yeah, I saw this. A breakout of this zone. this is my interest. So I would have drew it here, but it's all the same, a breakout of this zone. So what do? I just simply need to come and put my order. Note, I'm putting my order at this retest. So put my order here and my SL. You can see 14 pips. Right, alright, so 1:3. So you see this 1:3. So what do you observe from this? We never got tapped in. So this was a 0-day trade, no trade opportunity for this day, and we don't force it. We say we'll be picking our entry in London Q zone. We are true to this, and if it does not work, we rest. It's good for you to rest too. If you are not in trade, your mind is relaxed, but if you're in trade, it's something except you are more experienced in this game. But then you see, okay, this was a kind of breakout in New York Q zone and a good retest for entry, because you don't really have a tight spread, but then there's no entry. But maybe you can do your back testing to know whether New York will be okay for you. Alright, so this is Thursday. And so you don't just want to trade, you want to check the economic activities to see what is really happening. Is there any critical news on the time you are trading? You need to observe all of that and know how to work with it as well. Be very specific. Don't use one variable and then you think you are trading. No. Add all the notes, connect all the notes together. Alright, so this is Thursday. So what do we see? First of all, we see Asia. Okay, there's been much consolidation. You see all of this consolidation. So me looking at this now, I'm first spotting a kind of, maybe a manipulation, a kind of breakup structure with good momentum. So what am I doing? London, I'm looking at this. So this is a low, this is a high. So it was never broken. Yeah, see, there was no clean breakout for me, and then I saw this red. So what is this giving me? This is giving me that maybe the buy momentum is continuing. But first, I will not just jump in this. What am I waiting for? A break of structure. Very important. Please, a break of structure. So I'm just watching. Has market broken down? No. Has market broken up? So until you see any further, you see this. But this was what? This was outside Q zone. See this outside Q zone. But then it makes sense if you know what you're doing. Right. So what happened was that, let me draw my highs now. So this day trading, please, this day trading, I'm not, so I don't know, you have your different opinions, but this is day trade. So now look at this now. So I can spot that, okay, there's momentum here, this momentum, but it failed to break this high. So I'm waiting for a breakout. So maybe after this small breakout within, I might say, okay, is this something for me to venture? Just in case I want to consider this trade, what do we do according to our strategy? We use, after this breakout, entry from here, and then 14 pips. Wow. So you see what happened, guys? You see that we almost get kicked out. So you see, so now me looking at this trade after this breakout entry, yes, am I likely, this is the low, but then I might just be a little skeptical. Maybe 15 this time. Yes, I say 14 to 15, maybe 15 this time. So let's just say we use this, and then we are targeting 1:3, or a kind of swing high. So that will be in the past. So let's just put 1:3 and see what happens. So 1:3. So what happened? Market activated us, almost heading to our SL, but then boom. And this was an economic news event. Please note this. If this was 2:15, if this is an economic news event and I am just entering this trade, there are two things I'll do. Either I ignore the trade, or either I minimize my risks. This is what we call a kind of C setup. Some people have A plus setup, but the truth is that there's no A plus setup. But you can have an opinion that there's an A plus setup. Why? Because this game is probability. It's probability. But then you can have A plus setup, but take note that it is probability. You don't need to know what is going to happen for you to make money. You just need to apply your system and keep coming up with the routine, and then watch out for valid response. So after this now, you see what happened. Boom, let's just say this day was successful, but let's just say instead of 3%, we reached 0.5, then this was 1.5%. So that means our account is up by 7.5%. Wow, yeah. Alright, so this is Thursday. So on Friday, this is Friday. What are we watching out for on Friday? You're looking at these two. On Friday, the momentum was harsh. So in this past price data, you can see this high. So me connecting this high to the future. So if you want this line, okay, if this line is like this, if you want it to be straight, let me help you. What will you do? You click on this triangle up. See that triangle up? It has straightened it. So that is an update. So now what happened? Was there a breakout? And check the timing. It's very important. So this is just 8:30. Me coming to see this kind of momentum, will I have taken this trade? So you need to think logical as a trader. Ask yourself, we do have taken this trade. Okay, let's just say for the purpose of this, a breakout. Okay, let's just say for the purpose of this, we took this trade. After this breakout, we just enter it as if it was an engulfing candle. So let's sell 14 pips. So let's just say this low. Let's just say 15, something like this. So now what happened? Market came, activated us, boom. 1:3 target. So 1:3. So what happened? Market rally up, came down, retested, and what? Boom. Wow, this day was even successful. See, it was successful. So that means 7.5 plus another 3%. That is what? That is 10.1%. And literally in a week, you have passed your profit account of 10%. You can see the secret. The secret is patience and discipline. Focus on quality instead of quantity. Don't waste your money on trade that are not aligning with your system. So this is Friday. So for the purpose of this, I don't want to make this lengthy. You go and test this for yourself. Test this. This is Monday. Test this, and you be sure that you are building an edge and you are working on to profitability. So thank you very much. I hope you gain value from this. Thank you. Do to like, subscribe, and also leave a comment in the comment section or your reaction. So as well, other tools, we can also use other tools for analysis, like maybe this box. We can use this in marking our zones, like yes, our order blocks and fair value gaps. So this is a kind of order block, right? You use square to mark it. So this you use it to measure price range from here to this swing high. How many pips it to give you, right? So as well, what again? Our FIP2 is used for retracement. So now from this high to which low? Let's just say this. So which point are you expecting retracement? Okay, we are not talking about FIP2 now. So the FIP2 we use it in measuring retracement, pullbacks, or correction, as the case may be. Alright, so we see you guys in next video. Thank you very much. Do well to like, comment, leave your reaction, and subscribe. Thank you very much.